It says, be not deceived. Whatsoever a man soweth, that shall he also reap.
All right, it's 4 p.m. on Wall Street. Do you know where your money is?
How much should I invest?
I really looking for some direction.
Should I hold on to my house as an investment for my future?
What should we do to have money that we're putting aside?
Welcome to Financial Issues, where we align reality with truth. Conservative talk radio you can count on. Financial issues that you need to know.
We face a disintegrating economy, a weakened defense, and an energy policy based on the sharing of scarcity. We will simply apply to government the common sense that we all use in our daily lives.
Now, here's your host, Dan Celia.
Welcome back. Financial Issues, I'm Dan Celia. It's great to be here. We've got some economic news coming out. Hey, I got some positive economic numbers that I want to talk to you a little bit about here this morning. Some things that are somewhat encouraging to me. I had an encouraging moment back in early December sometime. I don't remember. Maybe Devin does. It was kind of scary for everybody that I was so optimistic. But we had some encouraging data back then, and I was pretty excited about it and talked about it for at least a whole week. But I wasn't getting my hopes up. You may remember it, and I said, I'm not getting my hopes up. This doesn't make a trend. We need to see some kind of trend here to start getting a little bit excited about it. But some encouraging things coming out of the economy today that I think are important as we look ahead in 2014. So I want to get into that a little bit because I think it's important that we kind of talk about the good stuff as well. And I will qualify it by saying, let's see how good it really is. I'm not jumping to any conclusions that this is a trend. I'm a trend person. That's what we do when we do analytical work. We are looking for trends. That's what we want to do. We want to look for trends. So as we look for trends, they need to be somewhat long term. 2 weeks is not a trend. 2 reports, 3 reports, if they're monthly reports or monthly economic data, not a trend. We need to see some sort of consistency, at least over 4 or 5 reports or months or weeks or whatever. How many times the report comes out. We need to see some trends on a positive note for an extended period of time. So I'm not getting too awfully excited. I'm not saying this means that 2014 we are truly in a recovery. I'm not there yet. And I will say that regardless of whether we are in a recovery, whether it be in 2014 or not, let's keep in mind that we've got an awfully long way to go. We have some severely rough numbers from the last 4 or 5 years that is going to take a considerable amount of time for us to get over. And we need to make sure that we keep that in the forefront of our thinking. So what looks like a good trend, what looks like some good numbers, what looks like a good year even in 2014 from an economic standpoint, I'm not talking about the markets. This has got nothing to do with the markets. I'm talking about the economy, which is far more important. So when we look at that, remember, we're probably comparing it, or at least I am. I will always be comparing it to last year. Last year, it pretty much stunk. Year before that, it was worse, and so on and so forth. I mean, we've got a long way to go to get back to 2006. And that's where we need to get to from an economic standpoint. Now, we had other things happening in the economy and in the financial markets that were building to the 2008 collapse. So we certainly don't want to see that, but I'm not concerned about seeing that. That's not what I'm worried about. So we're going to take a look at that. Of course, we're going to take your phone calls, 866-300-9298. We'll get to them in the next segment. If you want to queue your call up, 866-300-9298. Yesterday, the major indices were mixed. The NASDAQ was up 12. S&P was slightly down fractionally. The Dow was down 68. The Dow was positive most of the day. It was positive throughout the program yesterday and throughout most of the day. It started to take a negative downturn or started to pull back sometime around 2 o'clock yesterday, ended up down 68. Right now, Dow futures are up about 45, give or take. Haven't seen them in an hour or so, but they were up about 56 and pulling back to about 42, I think it was. So they're in positive territory. So right now, it looks like the markets are scheduled to open up positive. We'll have to wait and see what that looks like. Also, from the commodity side of things, we see oil headed back up. It's at 92.80, very good number. I'm going to hold to this all year long unless there's some geopolitical event that changes this. But I believe that we're going to see oil somewhere in the range of 91 to 105, 106, give or take. And that's the range we're probably going to be in all year long. That's not a bad range. I mean, it is compared to 40, obviously, but we can still see in that range, we should still be able to see stabilization in gasoline prices and diesel fuel prices. We should still be able to see that. As a matter of fact, we could potentially see a lowering of gasoline prices, and we are still seeing some of that lowering in gasoline prices as we speak, even though we saw somewhere around $100 a barrel, very close to that just a couple weeks ago. So we'll have to watch that. Natural gas down to where it's been, but it's at $4.15 right now. I'm hoping it doesn't break 4, but nevertheless, it's good news for me who heats in a very cold area with natural gas, and that's good news for a lot of you other folks as well. Also, gold is rallying again. It's up 3.4, $3.40. Silver is at $19.60. That is up slightly. Gold at $12.28. The agricultural commodities, with the exception of corn, are in positive territory. Corn's down over 0.5%. That's fairly significant, but we'll see how that shakes out. It's early in the day yet. So that's where we are on all the markets, all the indices. And I know a lot of people don't care about that, but there's an awful lot of people, an awful lot of listeners that do care about that and appreciate those numbers. That's why I do it, and I'll continue to do it. It's helpful, particularly on the commodity side, to all the great farmers that we have listening. So here's the good news. By the way, phone number 866-300-9298. Here's the good news. So we got jobless claims came out this morning. Jobless claims down 15,000 at 330,000 people filed first time for unemployment claims. Now, here's the real good news. First of all, that's the low since November. That's okay. That's good. But we're seeing the 4-week trend, the 4-week moving average has come down about 9,000, 9,750. So 4-week moving average is down. Now, the bad news is, there is some bad news in the numbers. The good news is the 4-week moving average. Let's hope that continues. The bad news is that long-term unemployment benefits, those people collecting long-term unemployment benefits, is up 50,000. That's pretty significant. 2.87 million people collecting long-term unemployment benefits. So that's not good news. What that means is that the long-term people are still struggling to get jobs. And the longer you're unemployed, the harder it is to get a job. And we have, 2.87 million people collecting benefits for the long term. So hours worked per week has not changed. That's not good. But the pace of layoffs, again, slowing down. Now, along the same lines, the other piece of good news that I very seldom talk about, I look at it all the time, I have talked about it, I look at it on a regular basis, is planned layoffs. So every month there is planned layoffs that comes out, and it's projecting planned layoffs. Companies, corporate America, that have announced or through surveys have told what they believe their planned layoffs are going to be for 2014. And the planned layoffs for the month of December, were down 32%. That's huge. But more importantly, Not only is it big, not only is that a big number, more importantly, it has been trending in that direction now. So we're looking at, for the year, down for 2012, it was down 3%, planned layoffs being down 3% over in 2013 over 2012, and that's very good news. So we're going to hope that that continues to trend in that direction, planned layoffs. Now, I like these numbers because, I believe that the economy is ultimately going to be turned around when consumers get turned around, and consumers aren't going to get turned around until they start to see their friends, their family, and themselves being able to get a job, to get a permanent job. Now, the vast majority of the jobs being created are part-time jobs. That's not good. We're not seeing the hours worked per week coming up. That's not good. So we've got a long, long way to go. But I'm talking about trends here, and what we want to see is things trending in a positive direction. Now, I'm not going to get all crazy positive over these numbers because we have to keep in mind that for 4 years, companies have been laying off. For 4 years, we've seen incredibly high first-time unemployment claims. For 4 years. At some point in time in corporate America, there has to reach a point where you cannot lay off any more people. You're reaching a point where you've got to maintain a ready and able workforce, even though you may not have the orders to justify it. You have to maintain a certain level of employees. And we've also seen dramatic cuts and deleveraging in companies. And again, you can only go so far. You can't, you just can't lay off everybody. You will have no bottom line if you do that, because you won't be able to produce goods and services when the economy picks up. So there has to be some of that creeping into the markets. I get that, and I understand that. So it's a positive trend. I'm excited about it. There are some other positive numbers coming out of the economy. This does not mean, and I don't want there to be any confusion on this. I am not making a case to be running and jumping out into the markets. Let's make something very clear. The market was up over 30% last year. It was up 16% the year before. The odds of that maintaining its pace are slim to none. The problem with the market growth that we've seen over the last few years is that the growth and the growth in corporate America has outpaced sales. So in other words, corporations are adding to the bottom line, which I'm going to be a little harsh and say through manipulating their balance sheet as a result of cheap money. But it has not been the results of higher sales. Sales have not kept pace with profits. Profits have been higher. Balance sheets have looked better in spite of the fact that sales haven't been any better. That's why I've been whining about the markets. It's a false positive. The way it is supposed to work is that companies begin to do better. They begin to sell more goods and services. Okay? As they do that, their stock price goes up. As their stock price goes up, it becomes more attractive for investors. As that happens, more investors come in to buy those organizations, continuing the momentum upward in stocks, all because consumers are spending money. It's the way it's supposed to work. We haven't had that. So the things that we're looking for now moving forward has to be, and I hope it has always been for me, is the economy, and is the economy getting better? So the economy, I don't care about the markets because the economy will take care of the markets if we can get the Fed out of the way, if we can get government out of the way, and we can get consumer spending. 866 300-9298, 866-300-9298. You're listening to American Family Radio Network. Financial issues, cue your call up. We're going to get to the phones. We'll be right back.